Sam stiskam ili... Much better. I'm gonna sit down for this one. No, because I'm too tall for the camera, and then let's do it this way. Yeah, tall people problems. Yeah. Anyway, hi everyone. Thanks for inviting me to this this meetup. Right, so I'll be talking on a topic that's slightly, it's different than what we heard from Igor. It's going to be about our usage of social networks in making predictions, specifically in two things. On one, in elections, which is where we've proven our methodology initially, and what we're doing currently, which is trying to predict markets, and I'll show you how that's going. So my name is Vuk. I'm a CEO of Oraclum, as I've been introduced. It's a data science company, and we pride ourselves in predicting successfully Brexit and Trump back in 2016. And Biden now in 2020, 1% accuracy. I'll show you those results. And the secret to our methodology is to use a combination of a wisdom of crowds on one hand and a network analysis on the other. I'll show you exactly what that means and how the whole social media sentiment thing kind of drops into our approach. This is simply just to show you the logic of how this works usually. So what we do, we get users on social media. We push ads or do campaigns or whatever to get people to come in. And then they solve a survey. We send them to our own app. When they solve a survey, we get the insights, and then we deliver the value to our clients. So this is how we make money essentially. So we deliver the value to our clients. Now the entire methodology we're calling it the Bayesian adjusted social network survey. Why Bayesian? I'll show you. But the main point here is that the three of us, the founders of Oraclum. So it's myself. I'm an economist. I have a PhD, and there's two others. One is a computer scientist and one is a physicist. So we started the whole thing by writing an academic paper about it, right? We were testing the methodology on students at FED, and we were asking them to predict their test scores and the test scores of their friends. And the results were really, really, really good using this approach. And then we decided, let's try to do it on in real life examples. And not to say that the exams are not real life, but elections were much better. And that's how we started the whole thing and started the company. We never wrote the paper. We never finished the paper. We decided to keep it for ourselves, to keep the methodology as a secret. Just like Coca-Cola, right? Secret ingredient. So how does it work? So as I already mentioned, there's two parts. The first is the wisdom of crowds thing. So we ask people three basic questions, right? We ask you first to express a preference over a given product or service, or for a political candidate, for example, opinion on an issue. So we did a lot of things for COVID and for vaccine rollouts. And then how do they think that other people feel about the same product or issue or candidate? And what do they think that how others would respond to the previous questions? Now, this might seem convoluted, but it's deliberately so, right? So what I want when people are answering these questions, I really want them to give a thought about what they're saying, right? So we invite people by social media, so Facebook, Twitter, usually. This is from one of our first elections from the Trump and Hillary election, and this is what it looked like. For example, a citizen of Pennsylvania would get this question, and then you had these sliders where you basically adjust your responses. What we notice what people do is when they start answering the second question, so how do you believe that others in Pennsylvania would respond? Then they self-correct their own answers from before. Hence Bayesian, right? So you're getting new evidence, you're thinking about what other people will do, and you're correcting your own responses from before. So this is only one part, right? If we just use this, it wouldn't get Trump and it wouldn't get Brexit, right? So we need to add something else, a different flavor to it, and that's this part, the network part. Now the network part comes in handy. So this was our first network. It was this was a survey done for Croatian elections in 2015. This is 6,000 people, and they're color coded by the political party they're voting for. And one circle is one individual. The size of the circle is how important you are in the network, meaning how many people your share, so how many people came to the survey via your share, right? So an influencer of the sort, right? So the colors of the parties, notice, for example, this yellow circle over here. Now, Croatian people probably understand who this was back in 2015. Do you have any idea? Like a huge cluster, right? Sorry? Yeah, GVZ, right? It's a populist party. But what's interesting here is that people who are voters of GVZ, at least this group, they only hang out with each other, right? So they have very little friends outside their own social circle. So they don't hang out with anyone who's, SDP or HDZ or most or whatever other voters. They only hang out with each other. So when they give a response in the survey, they say GVZ is going to get 50%, right? Which was unrealistic at the time. They were polling at about 3 to 5%. So when they give me a prediction, when a bubble like this gives me a prediction, we give them a very low weight. Okay. What I'm more interested in, so we have a same bubble here. These are SDP voters. These are ORAC voters, the green one. So what I'm most interested in are these people, right? Heterogeneous groups. Some of your friends are left wing, some of them are right wing, some of them are centrist, which basically means that you have a higher probability of being right. Right. So it's not necessarily that every one of these people is going to get the right election results, but they have a higher probability of being right. So we assign every person a probability distribution function, and this probability distribution function is basically your weight. So that's how the methodology works, right? So we give a very low weight to people in bubbles, and we give a high weight to people in heterogeneous groups who have friends in various areas. And this can work with elections, it can work with a bunch of other things, products, for example. But with products, it works better if, for example, when we did it for Uber versus taxi, right? When Uber came in, that was kind of a controversial issue. So you're supporting one or the other. So they were two very diverse groups. Or when we did it for COVID, or when we did it for vaccines. But when we do it, for example, for toothpaste, it doesn't really make a difference, right? So we can just stick with the regular survey. So it's really good when you have divergent opinions about a certain issue. So let me show you the results. The Trump and Brexit thing, this was the first thing that we did. So back in 2016, the Brexit prediction, the actual outcome was 51.9. We had it at 51.3 for leave. The Trump electoral college victory. So we guessed also the electoral college victory. So within a single percentage point for Pennsylvania, Florida, North Carolina, etc. And we also saw that Hillary was going to get the popular vote, right? So more votes overall, but that Trump was going to get the electoral college. This is just the calibration of the model. So calibration is how close you are to the 45-degree line. So the closer you are, the more precise the model. The farther away, the less precise. So the comparison with the polling average, the polling error was about underestimating Trump by about 4 points on average, whereas our error was less than 1% on average for the entire. So we didn't do it for the whole 50 states. We did it only for the 20 key swing states that were most interested. This is just like the media thing that we had. In 2020, again, head and shoulders above others. So this time we were running it as a survey for paying clients in the finance industry. They were interested in getting these results before anyone else. And we were adamant in our suggestion that there was not going to be a blue wave, which most pollsters were predicting at the time, that Biden was going to take Wisconsin and Michigan and Pennsylvania by a 6 or 7 point average. We were saying it's going to be very close. We were throwing Florida for Trump, which no one did at the time. Our electoral college estimation was 294. It ended up at 306, whereas others were giving Biden about between 340 and 350. Our error, so notice Pennsylvania and Wisconsin, the first two, incredible precision, whereas the polling average is much higher error in these cases. We had slightly higher errors for Florida and Ohio, but still correct direction overall for Trump in that case. Again, I just wanted to show you the calibration. This time the pollsters were even worse than last time, so the error was 6.6% on average, whereas ours was 1%. I just wanted to show you these graphs. Notice the second one, the one on the right. Okay, so this one. The huge underestimation of Trump once again, right? So we're talking about 6 to 7 points underestimation of Trump in some of the states, especially the ones that where he won, like Florida, for example, or Ohio. Okay, so now after elections, our next kind of fascinating thing where we wanted to try to see whether or not this works was in predicting social media sentiment, predicting markets using social media sentiment. So, right, it was something that we noticed happening, everyone noticed ever since basically January, or even since last year, things like meme stonks, which are stocks that only go up. Stocks are stocks that only go up, like GameStop or AMC. YOLOing, meaning you're basically throwing your entire life, you only live once, or you're throwing your entire life savings into one stock. So we're talking basically about, people are calling it craziness on the market, irrationality, whatever. So I want to capture this, right? So can this be captured? That's the question here, right? The cryptocurrencies, Wall Street bets, all these sorts of things. Now we've noticed that the trends are shifting significantly in the direction of retail traders. This is due to many things, like, for example, the Robinhood app, which is making it increasingly, basically lowering entry for a lot of people by reducing costs, cutting costs. So retail trading is now, I think, 25% of all trading volume. We're talking only about the U.S. market, which is huge. So they're bigger than everyone except high frequency traders. So yeah. The point is, let's, instead of criticizing them that they're crazy, that they're, ridiculous and stupid and whatever, it's better to try to figure out, why they're doing this, why they're behaving the same way. So we're saying let's try to apply our approach, our election prediction approach, to predicting markets. So we've opened the survey for the past 7 weeks, every Tuesday at 8 a.m. Eastern Time, New York, lasting until Wednesday 8 a.m. So open for 24 hours, predicting so 6 indicators. So Bitcoin, Dogecoin, the Dow Jones average, the US T-bill, S&P, US T-bill yield, S&P 500, and the oil prices for the close for Friday. So the final price for end of trading day on Friday, right? So a weekly prediction. And we're awarding people $100 each month. I think we're gonna give out $1,000 to the best predictor over a 6 months period to see how, because it's going really well. It's really fun. So I want to show you the results of these predictions. So far, so good. That's what we call them, highly encouraging. These are our predictions for the S&P. So the blue line is the actual close for Friday, or for daily close, and the little red square is the predicted close. Okay, so again, really awesome. So the gray lines are when people made the prediction. So you made the prediction here for Friday, and this is what it turned out. So people are even when the markets go down or when they go up, we're seeing a really good precision. We should see when it comes to more volatility what's going to happen. I'll show you later. But for the S&P or for the Dow, things were, I think this is for the Dow Jones predictions, things were really good on average, around or within a single percentage point, just like with elections. This is a summary of all the 6 indicators. So we started with the euro-dollar exchange rate, but then we moved to Dogecoin simply because the euro-dollar is too granular to predict. So you need to predict the third decimal point, which doesn't really make sense. So we changed it to Dogecoin. And so what we noticed is, for example, these indicators for the Dow and the S&P, the precision is really good, right? Because volatility for these indices is essentially low. It's about 3 to 4% every week, and we were able to get them within a single percentage point of accuracy every week. Oil prices, almost the same, T-bill as well. As for Bitcoin and Dogecoin, things are a bit problematic, especially, so this was done during May, and Bitcoin was highly volatile in that period, and people were constantly predicting it's going to go up, where in fact it was going down. But again, volatility is high here. So what we noticed is with highly volatile assets, the methodology is not that precise. So there's a caveat there. But with lower volatility asset, it's very precise. And the same thing happened in weeks 5 and 6. So again, but in week 6, it was funny that we got all the indicators moving in the right. The prediction was in the right direction, at least, even though the precision for Bitcoin and Dogecoin was again a bit off. Whereas the precision for these other indicators was quite good. If you want to follow these and see how it works out, you should sign up to our newsletter on Substack. We're running it. You can just type Substack Oraclum and see our newsletter. I'm writing it every week. And we're inviting people to surveys. You can try your own luck. See, maybe you get $100 by the end of each month, or $1,000 at the end of the testing period. But the point here is we want to see how this works out by the end of the 6 months period, right? So far so good. As I said, the first 6 weeks, the results were really good, really encouraging, but we need consistency with this, right? So by the end of the 6 months period, if we have the consistency in prediction for at least the Dow and the S&P, then we have something, right? Then what I'm currently doing, I'm putting actually some money into it. So I couldn't open a trading account for the company because it was too much regulations. So I did it for my own account, and I'm putting $500 every week to test the predictions, and so far so good. We're making money. So yeah, yay, yay to the prediction methodology. But yeah, before this becomes a monetizable product, which we can sell either to the retail investors or to banks and hedge funds, which are some of our clients right now. Until that happens, we need to again do a 6 month period of testing and see how it goes. Yeah, absolutely. So it's open to anyone who has an interest in market or trading. So every week it's open until 8 a.m. So that's 2 p.m. in Croatia until 2 p.m. on Wednesday. So follow us on Twitter and you'll see it every week. So it's Oraclum IS on Twitter. LinkedIn as well. Yeah, I'm posting. You can follow me on LinkedIn and I'm posting it there as well. Cool. Awesome. Thank you. All right, that's it for me.